the show where we look at the macro picture in the currency markets. All right. Basically, what we're going to do, we're going to go through today's data dump. There hasn't been any actually today, and but we have to have a look at what the U.S. dollar is doing right now, because it has the US dollar, or the DXY. The DXY is the US dollar index, and it has failed to break above the 97.70 level again. And if you follow me, if you follow this show daily, or if you are a premium subscriber, you already know that the 97.70 level on the DXY is a huge level. Actually, well, let's start by looking at the DXY, right? The 97.70 level, which is this red line right here. This is the 50-minute chart on the DXY. All right. Um, right here you can see that on last Friday on non-farm payrolls we had a huge bear run on the US dollar. The US dollar had broken above the 97.70 level and was trading at around the at around the 98 level, right? Before non-farm payrolls. When non-farm payrolls hit, well, the DXY dumped, and it broke below the 97.70 level. And if you see the white lines on my chart, that was the predicted move that we were expecting, because of the big bear move on the US dollar on Friday, and then on Monday, this kind of pullback on the US dollar inside this purple wedge. We were expecting for a break below and a continuation of the down move. Okay, now that didn't happen. We broke below. I mean, we broke below the purple wedge and below the 97.55 level, which was this base, the immediate base that we needed the DXY to break in order for a continuation. But what happened is that we found buyers, and we tested the 97.70 level again. Then we went down and we bottomed at around the 97.40 level, and we hit the 97.70 level again once, twice, and then we went down. All right, right now we are in no man's land, and uh, this is the main reason that I scheduled the daily edge at this time, because in 30, no, well, in actually 19 minutes, um, the PPI is going to come out, the US PPI, all right? And the US PPI, the PPI is the leading um, inflation data, and the expectation is that is going to come lower than last month's. All right. Now let's go back to the daily chart, because some of you are not premium members, and I see some names that I haven't seen before. So I'm going to show you why the 97.70 level is such a huge level on the US dollar, or the US dollar index, right? Um, we have been capped by the 97.70 level since November 2018, right? I mean, the US dollar has been in a very bullish move since the Federal Reserve started to ease its quantitative easing. All right. And well, the US dollar moved up, but it has been capped by the 97.70 level, right? And we tested it a couple of times, and right here in mid-April is when we broke with this continuation pattern, and we broke to the upside. But as you can see, we have broken to the upside twice, but it was clearly a fake out. And now we are trading below that level. So in my view, and in our premium community, we have discussed this. If we are trading below the 9770 level on the DXY, there's no directionality, right? There's no direction right now. What we need is a clean break of the 9770 level in order for us to be really bullish. Now, let's go back and let's have a look at gold, because gold and the US dollar are not 100%, but they are inversely correlated. If the US dollar goes up, gold, the price on gold goes down. All right, it's not a perfect inverse correlation, but it is an inverse correlation. But the thing about gold right now, first of all, let me tell you about our positions in gold. This gray square that you see at the bottom at around the 1276 level was our buy zone. Last week we bought gold, and if you know the way that I trade, I do not trade. Well, Jesus, just look at gold right now. Gold is moving down very, very, very quickly. But if you know how I trade, I do not trade aggressively. When I say that I don't trade aggressively, it's because I don't buy or sell at market. Even though I have this buy zone right here and this rejection of the buy zone for the second time, I am not going to buy unless I break the previous high. Because if we don't break the previous high, we are not breaking the bearish structure in price, right? So we put our buy stops above the previous high at around the 12.70. It was actually the our buy stop was put at the 12.72.90 level, and during non-farm payrolls we got filled. We took half of our position at the next area of resistance, and we move our stops below the previous low, and we got stopped out on a win on the second part of the position. And then price moved up, and actually, if you look closely, we were moving down bear channel, right? We were moving down in a bear channel. And if you look at past price action, and if you look at the candles, I mean, the bearish moves are massive, are super strong, and the bullish moves are not as strong. This means that the bullish moves are pullbacks, and the bearish moves are the actual um, turn of the price, right? We bought right here because we were expecting a move up to test this area of resistance. Half of our position off because we don't know what's going to happen. All right, there was a lot of sellers there. There were a lot of sellers there, and we didn't want that a winning position turned negative or stopped us out at break even. So we took half of our position, expecting for a continuation to the upside. And I'm going to show you right here. Price in gold moved above this trend line with this big bear structure, but immediately went down. So this was a fake out. Okay, if we go back to the DXY, and let's grab the 1 hour chart on the DXY. It is kind of correlated, okay? This move to the downside is the move that pushed price in gold up, and right now we are clearly in no man's land. So basically, we are we are flat in gold, And we also had a position on the Euro USD, a short position on the on the Euro USD that I'm going to go through in about a minute or so, because the moves or the bullish moves testing the 97.70 level. Okay, we because of the data that has come out, the jobs data that has come out, and out of the US, and also the unemployment rate that has hit a 49, I think it was a 49-year low on the US. Um, we were expecting for a rally in the US dollar, and we are still expecting that rally on the US dollar. But for the time being, we are being cautious, and unless we see a clear break above the 97 the 97.70 level on the DXY, we are not going to be pushing a long position on gold, or a short position on the euro US dollar. All right. Now, this is what's going on the DXY. And for the time being, like I said before, we are going to wait and see if we have a clean break above this level. And not only a clean break above this level, I don't know if you guys are fans of trend lines. A lot of traders are fan of trend lines, right? I am not a big fan of trend lines. But if we break above the 97.70 level, for a really bull continuation on the US dollar, we should be breaking above this trend line, and not only above this trend line, uh, but where I see the big volume being traded is here, right? It's right here, around the 90.70 95 level. This base right here, this zone right here, is where we should be break above. And if you look at what happened right now, if we break above this, the second red line, we are going to break above this trend line. And if we break above both, we are going to break above this structure that has been capping the US dollar. Now, again, I'm going to show you my news terminal, but there hasn't been a lot of data that there hasn't been a lot of data the scheduled data that has been dumped. But if you look at this right now, Purdue, we will see if China is serious and things don't go well. President will impose a 25% tariff. In my opinion, what's going on with the China trade war, right, is completely irresponsible, because you can't bully another economy into committing to your terms by imposing tariffs. And the main reason that you don't do that is because the tariffs that you impose to certain products on imports are paid by your freaking citizens, right? By your economy, not China. But again, this is what's going on. I'm going to show you what happened on the Euro USD yesterday. Yesterday, we had a short position on the Euro US dollar. Okay, it wasn't. I think I have to close this because I don't know what that is. All right. So we had a short position on the Euro US dollar. The reason we had a short position on the euro US dollar is because we were expecting a break above the 97.70 level on the DXY, which would mean that the US dollar would appreciate. If the US dollar appreciates, of course, the euro versus the US dollar would go down, or the the price between the euro US dollar would go down. And not only that, but we were at a zone that was historically a zone where high volume have been traded. All right. Not only that, I mean, it was a zone that was tested as support, and not only tested as support, but the reason that I focus on this zone is because a huge move to the downside, a huge bearish move of around 120 pips. And when you have a big move or a big bearish move, in this case, right, a big bearish move of 120 pips in three candles. This is 4 hour chart, so it's 12 hours. And sellers cannot break with a level because buyers are found and buyers take control of the market. This is a level that you have to have on your charts. If you see, we moved all the way up to the 1450 level. It was a big 250 pip move up, and then we moved down, and again we found buyers at the same level, but in a kind of pullback fashion, and we broke to the downside to test this level. And the reason that I wanted to short the euro US dollar was because of price action around this level. Now let me just thicken my chart out for you guys, and I'm going to move to the hourly. All right, and I'm going to show you what we did on the premium community. Okay, now we were looking at price action at around this time. All right, we were looking at price action at around this time. So basically, we started looking at the euro US dollar at around this time. Okay, and the euro and the euro up with that white dotted trend line. So I put on a sell stop right here, and we got filled with this big bearish candle. Okay, but what happened is that we did get filled with this big bearish candle right here, but immediately we started to move inside of a range. Okay, and when price reacts that way, or when price moves this way, I not only use um, level stops, but I use time stops. All right. So today we close this position, this short position on the euro US dollar, with a 9 pip loss. Okay, and the reason is that because price was moving, or I mean direction in price. Okay, even though we had direction in the DXY, we did not have direction in the euro US dollar. So that led me to close my position with only a 9 pip stop, a 9 pip loss. We had our stop loss all the way above here, but I wasn't going to let price hit my stop loss if I already knew that I had to close it beforehand. Now it's 6:27 a.m. my time, so we do have the PPIs coming out in 3 minutes. All right, so in 2 minutes I'm going to go back to my news terminal. We're going to see the actual numbers coming out, and we're going to go back to the chart to see the reaction on the US dollar. All right, but before, I mean, we have 2 minutes left, and I'm going to go through the GBP USD. Now, the GBP USD um, earlier today was at a very interesting point. If you look closely right here, all right here, this is where the bottom of this continuation pattern of this wedge or this is where this wedge bottomed before going all the way up here. Okay, now we didn't trade the bullish side of this breakout because we were already on a buy position in gold, and it was during non-farm payrolls. So if we had bought the GBP USD right here, that would have meant that we would have doubled our risk on the US dollar. So what we did is that we chose the best risk to reward scenario, and we chose gold. But then the GBP USD went down. It broke up below this big level, and now today it started to bottom around the previous. Oh, hold on, I'm going to go to my news terminal right now. We have 1 minute, and let's wait for that data to come out, and let's see how the markets react. If you want, if you want me to go through any currency pair or um, actually any asset. All right, so the PPI final demand actual 0.2% versus 0.6% previous, and an estimate of 0.3%. Wow. US continuing jobless claims actual 1,684. No, that's actually 1,684,000 versus 1,671,000. So that's a bad number for the jobless claims, because if the actual number is above the previous number or above the estimate, it means that the jobless claims are higher. The U.S. trade balance actual minus 50 billion versus minus 49.4 billion, with a previous number of minus 50.2 billion. All right. So overall, I see bad data on jobs number, bad data on inflation, and let's go back to the charts and let's see how the US dollar reacted. Let's look actually let's look at the DXY. All right. I'm sorry. It's right here. So this is the 1 hour chart. Let's go back to the 50-minute chart so we can see the actual reaction to the news. And of course, we have a bearish move on the US dollar. But not a big move, not a big move on the US dollar, given the bad numbers that we just saw. Let's go back again and let's focus on the left side of my screen, the upper left side of my screen, and let's go through the numbers again. So the continuing jobless claims are higher. The U.S. New housing price index stays the same. The U.S. trade balance rises negatively, and the PPI drops to 0.2% versus 0.6% previous, and an estimate of 0.3%, right? And the U.S. initial jobless claims come out at 228,000 versus 230,000 previous, and an estimate of 215,000. So very mixed numbers coming out of the U.S. Coming out of the U.S. and not a very big reaction on the dollar. Okay, If we go to the 5 minute chart, let's see if we can catch a bigger reaction on the US dollar. And you can see that the candle, I mean, it's I mean, there's no direction, there's mixed numbers, and it seems to be that buyers are jumping in. I actually thought that a bad PPI number was going to bring a lot of sellers on the US dollar, and a bad jobless claims number was going to bring even more sellers. But that is not the case, and that's maybe because the U.S. session hasn't opened yet. But I mean, we're going to still look at our levels and see what's going on. Now, the US dollar versus the Japanese yen. This is a very interesting chart to me. I don't know if it's an interesting chart to you guys, but to me it is a very, very interesting chart. And the reason is that not I mean, I'm going to go to the 4 hour chart, and not only because we have bottom at this level. Again, a big, big move to the downside. Buyers were found. Buyers took control of the market and they moved price up above the previous highs. And when I say the previous highs, I say the highs were found. We tried to break above the 112 level. We faked out and we started to move again on this weekend. President Trump started to tweet about raising tariffs on China imports, etc., which made equities drop, and we opened with this huge gap to the downside, and the downside continued. But we have found a support here around the 109.70 level. Now we have found a support around the 109.70 level, and this is a big level to me. All right. Now I'm going to zoom in because I want to show you how important. Not only we tested it here and found buyers that brought price up and tried to break with the 112 level again, but this was in February, early February 2019, or this year. We broke to the upside. We tested this level, and again buyers were found. And now we are testing it again. Okay, so for me this is a huge, huge level. And not only that, look at the past price action. Look at these candles right here. I'm going to use a rectangle to show you. If you look at this candle, I already told you that I'm not a big fan of trend lines, but when I see price action testing and retesting and retesting trend lines like this, I know if we have a break above this bearish trend line and above the previous high, we are going to rally at least to test the previous base around these levels, or the 110.60, level. Okay, now I'm going to delete this. Hold on. Now, what I'm expecting right now, or what we are expecting at the premium community at Tradimo, is a break above this trend line. Okay, and the reason is that if you look these two bearish candles, after a lot of indecision and a lot of choppiness, we we found sellers, and sellers tried to break below the 109.70 level, but buyers were found immediately, and they were stopped here. Okay, normally aggressive trade, but the US dollar versus the Japanese yen at around the 109.65, 109.70 level. But I am not an aggressive trader. You already know that. After I see buyers coming in into the market and pushing price up, I need confirmation, and my confirmation would be not only a break above the trend line, but a break above the previous high. Because if we break the previous high, we are going to break with this bearish structure that we are currently in. So basically, my level to buy the US dollar versus the Japanese yen is around the 109.97, 109.95 level. Okay. When we break above this, and if we break above this, we are going to be buyers. Actually, we already said, and this is, this is a free signal because this is a signal that I sent on the premium signal community on the premium chat with a buy stop at the 109. Let me see. Yeah, the 109.97. Exactly. The buy stop that I sent out, or the signal that I sent out, was a buy stop at the 109.97 level with a stop loss at the 109.57 level, and the first target at the 110.57 level. Okay? If price breaks below this low, if price breaks below the 109.57 level, then we just delete that pending order. And that's why I am not an aggressive trader. That's why I don't buy at support or resistance levels. Okay. Yes, you might argue that buying right here at the 109.69 or the 109.70 level gives you a better risk to reward scenario and gives you a the opportunity to trade a bigger lots. But if you look at my chart, there's two horizontal lines and one trend line. And what do you see? Well, the bearish structure is still active. We haven't broken with the bearish structure. Okay, break above the previous high and a break above this trend line for our buy on the US dollar versus the Japanese yen to be justified. Okay. Now, this is the US dollar Japanese yen. And again, this is a free signal that I'm giving you guys. But I'm going to repeat the rules. If we break above, this is a buy stop at the 109.97 level. If we break above, we are going to get filled. But if we break below the 109.57 or 109.57 level, then you should delete this order, because if we break below the previous low, this means that we are making lower lows, and that means that we are still inside that bearish structure, and we should not be buying this market. All right. Now, if you're not a premium member, I'm going to, on the chat, I'm going to give you a link where you can get a 1 month trial to our premium community. Just let me type it out. All right. And the reason we give out a premium, a 1 month trial is because we know that what we provide is added value. All right. I mean, we really don't care, or we really don't care that we are giving out 1 month for free, because if you take that trial, you are going to know, I mean, you are going to realize that what we provide is added value. And we are pretty sure that you are going to continue with us. So that's the link if you want to to get on that offer. Okay. Now, if you have any, any markets that you want me to go through, just type it on the chat, and I'm more than willing to do so. Right. Even if it's the Mexican peso. Now, just look at the. I'm gonna ask you a question, guys. All right. This is 1 hour chart on the GBP USD. We already went through the GBP USD. If you like trend lines, I'm going to draw some trend lines for you. Uh, there's not even a channel, but again, what do you think we should do right here on the GBP USD? Do you think we should be a buyer on the GBP USD or not? Now, in complete transparency, I'm going to tell you what happened with my GBP USD trade today. All right. Now, let me go to the. I'm going to go to a 50-minute chart. Now, um, when I woke up at around 1 a.m., I live in Latin America, so I have to wake up really early in order to trade forex. When I woke up at around 1 a.m., I saw this on the GBP USD at this level that we already talked about. All right, I saw this rejection. After that rejection, I saw this rejection, and I saw a break above this high. So I put on a buy here. All right, I bought the GBP USD right here with a stop loss. No, actually, I'm sorry, guys. This is just right now. This was my buy. All right. This was where my buy was. All right. I saw this rejection of the level that we already discussed. If we go back, well, I'm not going to go back. I'm going to go to the 1 hour chart. You already know that this was the level that was the bottom of this wedge before this big rally. All right. So I was watching that level when I woke up, and I saw this rejection. So I put on a buy stop at the top of this gray square. All right. And I put on the buy the buy stop, and I got filled. All right. I broke with the buy, and I thought, I'm sorry. That was poorly phrased. I didn't thought, because that's wishful thinking. All right. I mean, mathematically speaking, and this setup. I mean, a test of the previous low, or the previous base around the 61.8 on a high volume zone, and the previous POC has a I've done the math, and I've done the back test. It has around a 67% chance of, or 60% probability of going my way. Okay. And because that was the exact setup that I just talked about, and the risk versus the reward on that setup was better than 1 to 2, I took it. Okay. So we got filled, and then price to chop inside this very narrow range, and boom, we got stopped out. But I do think that this was just a stop hunt. And the reason I think that this was a stop hunt is because if you look closely, you can see that we move below, and I'm going to put on a horizontal line. I'm just going to change the color. I'm going to use magenta, because that's my color. I love magenta. So magenta, the horizontal magenta line is the bottom of the move to the down. And if you look closely, this candle just went below that level and then quickly. So I really do think that we are, or that we got caught in a stop hunt. Again, I would not be a buyer unless we break above, actually, unless we break above this level. I know that that right now it looks like we, I mean, if we take a buy at around the 130.67 level, I'm sorry, the 130.25.26 level, it looks like a big stop loss, but it's not, because this is the 15-minute chart. It's a 53 pip stop loss. If we go to the hourly chart, and if we look closely at what could happen, all right, I mean, the stop loss would be around 53 pips, but the possible reward would be around 90. All right, it's not a perfect 1 to 2 risk to reward scenario, but it is a risk to reward scenario that I'm willing to take. Again, if you like trend lines, I'm gonna draw a few. And as you can see, if we break with this previous high, we are going to be breaking with this trend line or the bearish structure. Again, I am not going to put on a buy stop on the GBP USD. And the main reason that I'm not going to put a buy stop on the GBP USD is because tomorrow we have the GDP coming out of the UK. And the expectations are that uh, uh, I don't have my economic calendar right now, but I do think that the expected number is 0.2%, and the previous number was 0.5%. If any of you guys have your economic calendar with you, and I am wrong, feel free to just point it out on the chat. And that's the main reason I'm not going to be buyer. I'm not going to be a buyer on the GBP USD. Yes, today we might break, or I might get filled on my buy stop, or right here below, above the previous highs. But we are expecting a bad GDP number tomorrow coming out of the UK, which would mean that the GBP would the GBP would um, have a bearish pressure tomorrow. We could go through the US dollar, Swiss franc. Wow, I mean, if you are a premium member, or if you follow, if you join the daily ages, well, every day, you know that I don't trade Swiss franc uh, currency pairs, and the reason is that I don't trust the central bank, and that's the main reason. That's why I trade Swiss dollars pairs. But if you do, what I'm seeing right now is a huge rejection. Actually, I'm going to stop using that word because I sound like Donald Trump. A big rejection, a big rejection of the 0215 level right here. Okay, big rejection. I mean, buyers have tried to break above that level countless times in the past 2 weeks or so, and I mean, currently we are trading down. But again, in my opinion, we are in no man's land, and the reason we are in no man's land is because you need to consider the range that price is trading in. The range that price is trading in is between, I mean, the low is at the 0190. I'm sorry, the 0129 level, and the 0215 level. All right, this is the range. This is the range. And even though right now is moving down considerably fast, I would not be a seller unless we break with the bottom of the range. And I would not be a seller at the time of the break. If we go down and if we break the bottom of the range, I would expect, actually, I'm going to show you the levels. I would expect at least, and I'm going to use magenta again, guys, because this is a level that is not on the actual range. So if we go down and if we break with the bottom of the range, I would expect Momo traders to take profit at the 0070 level, and then maybe, I'm sorry, I didn't click this, and maybe a test of the broken level of a test of the bottom of the range for a continuation to the downside. Again, I don't trade Swiss franc pairs, but technically speaking, this is what I would be looking for, and here is where I would be looking to sell if we break to the downside. Okay, the stop loss might be tricky because because we don't have levels around this level right here, but this level has been broken in the past. Again, I'm not going to give you the actual signal, but this is the level I would be looking at for a sell opportunity. Now, the US dollar Canadian dollar, the US dollar Canadian dollar, just look at this chart. Do you find this chart attractive or what? No, this chart is not attractive all. At all. This is the 1 hour chart, guys. Just look at this chart. Yes, we have had some moves, some big moves to the downside, but if you look at the size of the move, it's just 80 pips. This move to the downside is just 80 pips. This move to the upside, it's just 54 pips. To me, this is untradeable. Why? I'm going to show you. Let's go to the 4 hour chart. Again, we are in a range. Okay, we are in a range. The top of the range could be considered the 135 level, and the bottom of the range could be considered the 133.7675 level. All right, and trying to buy or sell the US dollar versus the Canadian dollar inside this range, to me, is insane. Okay, maybe if we test the 135 level again, I would be a seller here, right? With my stops above the previous high. Okay. But I would need at least a rejection and a break below the previous low at around the 134.72 level. And that would yield a 50 pip stop loss for a possible 95 pip win. Okay, and given the price action that we are looking at and how slow this market moves, to me is just not going to be profitable. One of my favorite pairs of one of my favorite currency pairs to trade is the pound versus the Japanese yen. Do you guys trade the pound versus the Japanese yen? Well, I'm going to show you why it's one of my favorite currency pairs to trade. Hold on, let me just catch it. Boom, boom, boom. Where is it? Here it is. All right, the Gepi, the big bad dragon. I love the big bad dragon. And the reason that I love this currency pair is because of the big moves that it yields. All right, just take a look at this bearish move. It's a 240 pip move in 2 days. All right, That is just, I'm going to compare you the last 2 days on the Gepi. The Gepi is the pound versus the yen. I'm going to compare you the last 2 days on the Gepi when it, and actually now that that I'm seeing and that I'm watching this chart, I am looking at a huge missed opportunity. But it doesn't matter, guys. I mean, you are going to miss. I mean, if you're really, if you want to be a trader, or if you are a trader, you already know that you are going to miss opportunities. But I mean, I didn't see this. I didn't see this level. I don't know why. I mean, again, magenta. But look, tested, tested it again, and then a big bearish move. I should have put a sell stop at the 144.74 level with a stop loss at the 145.40 level. And if we're looking for targets, well, my first target would have been actually right here where it's at the 142.48 level. So that would have yield around 230 pips for a what a 50 or 60 pip stop loss. This is a missed opportunity. But again, it doesn't matter. Opportunity every single day, and we are not going to be chasing the market. All right. So, yeah, the reason that I'm showing you the GEPI or the GBP versus the US, the GBP or the pound versus the yen, is because I want to show you the power of this currency pair. Okay. This move started on May 7th, which is my birthday, about 2 days ago, and we had a 220 pip move. Now let's take I don't know, the euro versus the US dollar, and let's look at May 7th. Hold on, this is the 1 hour chart. All right, just let me get rid of this vertical line. Right, May 7th. All right, May 7th is here. So if we take the low on May 7th and we go to where price is trading right now, it's just 30 freaking pips, right? I mean, it's 30 pips on a market that is choppy, that has no direction, on a market that we lost 9 pips. Why would you want to trade the euro versus the US dollar right now and not trade clean breaks and clean moves like this? Okay. That is why the pound versus the Japanese yen is one of my favorite currency pairs. I'm going to show you a couple of big trades that I have taken on the pound versus the yen. Just look at this continuation pattern right here. I mean, I am almost um, I mean, this is, well, actually, this is exactly the triangle that I traded. I put on a sell stop below these lows and a stop loss above the highs, which means risking about 72 pips. And my first target was here. Okay. So that means that I was risking 70 to 72 pips and I made 157 pips. And me, not only I made 157 pips, but everybody inside the premium community made 157 pips. The next thing we did is that we moved because we only took half of our position here. But when we saw a bullish reaction from these lows and a break above our first target, we closed our position above these highs, which means that we made another 100 pips on this currency pair. Okay. And that is what we do. That is what we do. I mean, we leave our egos away from our charts, away from our screens, and we don't trade. I mean, we could be trading oil, and actually, I am thinking about uh, bringing back crude oil um, signals to the premium community. And the reason that I don't currently I don't trade oil is because I haven't been following macro events, releases, and actually price action in crude oil. But I'm thinking about bringing it back because it is a market that it is profitable for me, and it could be profitable for you too. Now, well, this is a big level. Markets that I don't trade are agriculturals, and at Trade Emo, we have a few coaches. I mean, a few trade. We have actually three traders. I trade currencies, and there's two Matthias K and the other Matthias. They are actually awesome traders, and they trade options, and they trade agriculturals. And if you join our premium community, and if you take that trial that I just sent you through the chat, you're going to have access not only to my signal but to their signals too. Uh, it's a shame that I don't have the chart right now, but Matthias K just took a few days ago took a buy on a 3 contract buy on the crude oil, and he's up three handles, I think. So what I'm saying is that you're not only going to profit from my signals, but you're going to have access to stock signals and futures and option signals. It is a complete package for only $49 a month. And if you take that trial, you're going to get 1 month free. I mean, what else can you wish from us, or can you expect from us? So that's why I trade the GBPN. I am rambling, I know. And why don't we have a look at the DXY and what's going on right now? Again, mixed numbers, and this is the 5 minute chart. I hate looking at 5 minute charts, 50 minute charts, 30 minute charts, hourly charts. I mean, I don't scalp, I don't day trade. But the reason we're looking at the 5 minute chart right now is because of the data that has just been dumped. Let's go back to the news terminal. Red box is a great. I mean, if you're trading currencies, or if you're trading at all, you should have access. I mean, you should buy access to news terminals, um, because I mean, my 40 is currencies, and when it comes to currencies, I mean, you have to be on point of monetary policies, for example, today, I mean, inflation numbers, job numbers, because this is what I mean. Because by looking at those numbers, you can see um, how a given economy is doing, and by knowing how a given economy is doing, you can know if that currency is going to appreciate or depreciate, and then and only then you can have a bias. Okay, and when you have a bias, you and after that, after you have a bias, you go to the charts, and only then you start to analyze the levels that you are going to be buying or selling given your bias. Okay, so Redbox is it's a great news platform. I mean, it's you already saw it at well at 6:30 my time. The release came on point, and it was practically automatic. So let's have a look at what has happened. I mean, there hasn't been a lot. I mean, today the economic calendar today was not. I actually was expecting a dull day because there was no news during during the London session, and the only news schedule was the PPI and the jobless numbers out of the US. But again, it was very the reaction on the US dollar was very choppy. But let's see what has happened. Let's look at commodities. All right, and again, why don't we look at commodities because of Matthias's buy position on oil? So I think I saw something out of Iran's. Yeah, OPEC daily basket price at 69.88. Let's have a look at where oil is trading right now. So let's have a look at crude oil futures right here. Yes. So I wanted the June contracts on oil futures. 61.50. I mean, hold on. This is the 5 minute chart. Let's have a look at the hourly chart. Again, that was a great buy here. And the basket, what was the price? 69.88 on the OPEC daily basket. South, no, not gold. Indian total oil products export in January fell again. When oil output falls, it, that's a bullish momentum on the price of crude oil per barrel. Be, um, and the reason is that if the output decreases, the price of barrel is going to increase because there's less oil available to buy. OPEC pumps 3.26 million barrels per day in April as sanctions hits Iran's output falls. So everything that we are reading right now about crude oil is bullish, and that's why Matthias took this buy position in crude oil. All right. If there's anything that you want me to go through, again, guys, just put it on the chat. And if not, I think that I'm going to end today's daily edge, and I thank you for joining me today. And if you want to take part of or if you want to take a look inside of our premium community, where you can have trade ideas about gold, currencies, agriculturals, commodities, stocks. Just click on the um, on the link that I shared on the chat. And if you are not subscribed to my newsletter, and my newsletter is just a list of emails I that I send an invitation every day whenever I'm going to go live. So, for example, today I sent the invitation 2 hours before I went live to all my subscribers, and If you're not part of, I'm going to give you the link. Hold on. Hashtag, no, not hashtag. Hashtag Daily Edge. If you're not subscribed to my newsletter, just go to the link. I'll just email your name and email, and you will get an alert or an email every time I go live. And I go live every day. All right. So I thank you for joining me. And premium subscriber, I really, really, really urge you to take that offer for a 1 month trial. Okay, and please take it. And if you do, I will see you on the inside. Thank you, and I'll see you tomorrow.